From the trading desk of DailyForex.com, this is Chris Lewis looking at the upcoming April 12th Forex session in the euro dollar. And as you can see, we have the 131 level still marked on the chart from the video yesterday, and still looking at the shooting star that had formed as well that we featured in yesterday's video, which we actually broke above, but as you can see, we didn't break above with any conviction, and that does have me somewhat concerned from the bullish side, I should say. So, looking at this chart, I still have the same general feeling about it that we are trying to ask questions of this resistance area. You can see we made a little bit more in the way of gains during the session on Thursday, but still didn't really conventionally stay above the 131 level. It's a few minutes before the GMT close of the candle, and we are about 9 pips above it. So hardly any kind of massive breakout. The question then becomes, how do you play something like this? Well, I see this area here, which is bordered by the bottom of the candle for the Thursday session, as being a gateway to lower prices. If we can get below that, I think the pair starts to sell off again. Also, another thing you may want to keep in mind is that this area around the 131 level is in fact the 38.2% Fibonacci retracement level. And as a result, we have a couple different reasons to think that resistance will step into the market. The Europeans have done absolutely nothing about their financial crisis, and in fact, this whole thing in Cyprus has a lot of people nervous because now they're, at least the genie's been let out of the bottle, that one of the ways to fix this situation is going to be to come after depositors. Yes, they backed away from it, but once that idea has been thrown out there, then you have the possibility of it coming back being much greater than what people would have thought just a few weeks ago. Because of that, I believe that there will be a certain lack of confidence in Europe. And then also, on top of everything else, something we haven't talked about in a while is the Italian electoral problems. No governing coalition, probably going back to the polls. And in fact, the rift between some of the higher ups is actually getting worse. That still has people nervous because of the fact that many of the anti-austerity bunch in Italy did quite well in the elections, and one would have to think that Italians are just that much more sick of austerity, a couple months later. So there is a chance that they may push through even more anti-austerity candidates, and that, of course, would scare the bankers more than anything else. With all that being said, I think there's just far too much possible headline risk to actually own the euro at this moment. However, I am the first to admit that if we manage to break the new highs, we probably are going to run to about 132.50 or so, then to 133, and then eventually somewhere around the 135 area. I find it difficult to think that's going to be the case, though. I think we're actually going to start to drift around and meander, trying to find our warm months trade range, as traders are undoubtedly not quite yet, but just a few weeks away from thinking about going to places like the Hamptons and ignoring these charts.